Hey there, everybody. This is Bob with Trade Genius. Got my good friend Phil here. We have a great story for you today. It's not an April Fool's joke, but the joke's on us. Stay tuned.
Trade Genius.
Hey everybody, it's Bob with Trade Genius. Usually I do fun ads. I talk about our service, but I want to be serious with you for a second. We've been helping a lot of people trading for a long time. As you can see here, I want to let them do the talking for me for a change. But most importantly, we want to help you too. If you've not joined our service yet, come check us out, tradelikeagenius.com. Full service. We have chat room. We have the algorithms for you. We give trades out every day. We educate you. So go to tradelikeagenius.com. Check us out. What you get out of our service is much, much more than what you put into it, and we'd like to see you in the room. Thanks for listening. Okay, Phil. Cupboard's running dry, well's running dry, refrigerator is bare, we're running out of options. What the heck am I talking about here?
You are talking about the piggy banks. There's a couple piggy banks. One is obviously our tax receipts that we use to basically fund everything, which isn't keeping up, obviously, with the crazy spending that's going on with the government. So we can look at that chart first, right? So here we are. If we look at this chart, and you'll notice here that it's basically has a line graph. Line graph is down there at negative 10% change from a year ago. So that's a year over year change in tax receipts. Whenever we go negative, we get a recession. That's what those gray vertical bars are in the background. This is like one of those things where the hit rate doesn't fail. Okay. And we're getting one of our more negative readings. So that's a big problem. That's very indicative of the health of the economy. Things like GDP will probably, there's a lag, but I suspect we'll see GDP contract as this leads us into a recession. The other one, Bob, is the reverse repos. Now, reverse repo, if you don't know what reverse repo is, essentially it's a liquidity window for the banks, specifically for overnight lending. We don't always have a reverse repo open where the banks can go to it at night. Usually you see that when the Fed feels like there's a liquidity problem in the system. So on one hand, you have the Fed, every presser saying, the banks are in great condition. At the same time, we have reverse repo out there. It's kind of turned into a piggy bank for Yellen in terms of tapping into that to feed her treasury bill addiction, which has been fueling the markets. And that's why we've been going up. And that's why I am of the mind that we delayed the recession by a couple of quarters, maybe 3 quarters. So you look at the reverse repo, it's being drained heavily. Again, that's because of the T-bill issuance. It's directly related to that. Now, will this continue? And if it goes to zero, what happens? Well, I'm of the mind that it probably won't go to zero, even though the trend on this right now is basically indicating that we would see it zero out sometime this month or next. But I think you're going to see that slow, Bob. And I think you're going to see that. That's why I think also too, you're going to see the issuance on the T-bills kind of be curbed a little bit. And what that's going to do is it's also going to cause the net liquidity to start to come out of the system, right? So as this goes down, it pushes up net liquidity. We've shown you guys that graph before. Those of you that get the newsletter get updates on that. Or if you have the net liquidity indicator, which you can get at our website, you'll see when the liquidity is signaling risk on or risk off. And right now, because of the way that the repo has been behaving, we're actually risk off right now. So liquidity net liquidity available to the system has actually been draining. So there's, it's a dynamic thing, Bob, but I think that we're probably running into a situation here now where if we do get our blow off scenario, because of the tax receipts, because of the liquidity problems that we're going to have with net liquidity, it's going to be very difficult for the markets to go up as we progress through the end of the year.
Yeah, there's an issue here. We blew out our deficit and we're supposed to be having, really, really good GDP and really good economic expansion, yet our deficit's increasing. That just means that we crossed the Rubicon. Right. And if this thing gets anywhere near zero, QE's coming back to life from the Fed instead of from the Treasury. The other thing I found interesting, Phil, we just did our podcast on the macro, but micro VIX is up today. Micro TOT got spanked today. And the market's down a little bit. So I find it interesting here. Maybe people are starting to sniff out on the bond side is that Janet Yellen is going to have to slide out onto the curve here a little bit, and people are trying to front run her. So it'll be interesting to see what happens. $500 billion is maybe a month or two left, in the amount of money that we're spending, and we're spending it like absolutely craziness. So maybe, your June number is going to come to fruition. fruition, Phil. But we could get a little bit of a sell-off, between now and then. But it's just going to probably be another buy to dip until people absorb what's going to happen with the QE. Gold miners are up again today. Silver miners are up again today. The energy names are up again today. Uranium got a big boost from Goldman Sachs today. So a big pop up on CCJ. My view is still we're going to probably get a double yet out of like URA ETFs. So I still think we're in the great rotation, Phil. And then I think the whole Jenga mountain comes collapsing down on us.
Yeah, I think the setup is prime for seeing that happen. So it's just going to be a matter of timing. But the elements and the pieces are definitely in place for that. So guys, let us know what you think. Are we crazy, or do you think that we are in fact going to see some trouble as we get into the second half of the year and into the elections in November? Love to hear your thoughts below. Otherwise, guys, check out our stuff over at tradegenius.co. Like I said, if you want to see the net liquidity tools of that nature, you can get it on our website under indicators, or if you want to join us in the room and navigate what will be a very tricky market this year, head over to tradegenius.co. Check out our specials. You can get into the room with me and Bob. We'll help you navigate this stuff. Otherwise, thanks, Bob. Thank you guys for watching. Please hit like and subscribe, and we'll see you guys on the next video. Take care.
Trade Genius.